maybe something that we can do to just kind of wrap things up is in terms of like a little bit of a strategy thing here. Just to kind of reiterate what we're looking for. Some people were mentioning, the follow through day. That's something that we've talked a lot about on the show. And just to reiterate, the follow through is, if you get a rally day, and that could be a day that ends up down for the day, but is up, off its lows very strongly, closing in the upper half of its trading range, or if you get a day that is able to close positive, we consider that day one. As you are going in this downtrend, if you can get a rally day, that's day one, but we don't act on that day. Just like with Friday's action, as strong as that was, we don't act on that day. What we do is we wait for a confirmation of that. And I always think back to geometry, right? In order to get a line, in order to get an uptrend, you need 2 points. So the rally day is your first point, the follow through day is your second point. And that tells you, hey, this is a potentially a change in trend. And for that fourth day or later, kind of what was it? Between 4 and 12 is kind of the sweet spot, but we've seen them as late as 20, 21 day, 17th day follow.
We had a 28-day example, I think.
Right. Yeah. So they do happen later, but the sweet spot tends to be 4 to 12 days, and you look for a day that's up significantly. Now that's going to be tricky right now. There's extra volatility, and so a 1% day is generally maybe what we're looking for right now, and that might not seem like very much when you have 9% days all over the place. So we have to be very careful not to miss out on something because we're putting that criteria threshold too high. But if you do see that strong day with volume picking up from the day before, then that's your signal that you can start doing some buying, but you don't go all in. And it's one of those things that you let the market tell you whether you're right or not.